Do you own an S corporation or are planning to start one? Then this video is for you. It could save you from a very costly mistake many S Corp owners make. My name is Alex and I run an accounting firm. Today I wanted to share with you a story about a client that came to me late last year. It was towards the end of October and I had to act fast in order to fix a serious issue with the way they were paying themselves. Well, actually, they weren't. So here's what happened. The client reached out to me and we started having a conversation about their business. The business was running great. They were an S corporation in the construction niche. They've been running their business for several years now. The revenues looked great. Everything else seemed solid. But there was one key detail that they were missing. They were only taking distributions. They were not taking a salary, even though they were actively working inside of their business. And it turns out that they did the same exact thing last year as well. And the worst part is that they were working with a tax preparer, not an actual tax professional. They were working with somebody that just filed in the correct numbers in the right box, and they had no idea how the business was even supposed to be ran. Maybe they were just inexperienced and they didn't know. But that's why it's so important to work with somebody that's an actual accounting professional, not just a regular tax preparer. And when you're an S Corp owner, this is one of the biggest misunderstood and most dangerous mistakes that you can make. As an S Corporation owner, if you're actively working inside the business, participating in the day-to-day activities, the IRS expects you to pay yourself a reasonable compensation, meaning if you were to hire somebody else to do the same job, you would pay them a reasonable amount and you pay yourself the same amount. And remember, that's not optional. And that salary is subject to payroll taxes, which help fund Social Security and Medicare. But here's the thing, if you skip the salary and just take distributions from your company, the IRS sees that as tax evasion because you're actively avoiding paying payroll taxes. And that can lead to audits, interest, penalties, back taxes, and a lot of stress. And the worst part is the client had no idea that they were opening themselves up to such a huge audit risk. And it's relatively a simple, easy fix. Now, thankfully, it wasn't too late. We still had 2 whole months to fix this issue. And here's exactly what we did. We ran a reasonable compensation analysis where we reviewed exactly what the client did in their business. We checked their time commitment to the business and what someone working their position would reasonably earn in today's market. There's actually some IRS guidelines that you can look at and third-party tools you can use to come up with this number. We set up payroll and started paying the business owner their reasonable salary that they missed out on paying themselves throughout the year. Now, the only issue with that is that they had to back pay a lot of taxes to the IRS. But on the flip side, they were 100% compliant because any taxes paid through payroll withholdings are counted as paid on time. They're not the same as quarterly tax payments. We documented everything, made sure everything was compliant, set up the payroll on auto pay. That way the business owner could just forget about it. If you're an S corporation owner and this story sounds familiar, remember, you're not alone. This happens all the time, especially if you're just working with somebody that puts the right numbers in the correct boxes and not somebody that works with your business closely. Now, the 3 key takeaways for S corporation owners are you must take a reasonable compensation salary if you're actively working in the business. Salary comes before your shareholder distributions. And the third takeaway is to make sure and get started early so you're not scrambling in Q4 at the end of the year. Think of your accountant as a financial co-pilot, not just somebody that hits submit on your tax return at the end of the year. This is someone that should be working closely with your business and updating you monthly. If you're not sure if your salary is reasonable or you haven't paid yourself a salary at all, don't panic, but do reach out now before December. That way you don't have to panic and scramble and pay a huge amount in payroll taxes all at once. And if this video helped you understand things a little bit more about S corporations, give it a thumbs up, subscribe to the channel, or share it with somebody that is an S corporation owner to get them educated and get ahead of the ball. You never know who needs to hear this. Thanks for watching. My name's Alex, and I'll see you in the next one, where we make numbers make sense.